Hi, I'm Gina, and welcome to Startup Divas. Today we will talk about how coronavirus can impact your option grant if you're laid off. We will talk specifically about taxes. If you want to know more about other aspects of employee option grants, please check out part 1. From this table, you can see that at Exercise, you may have to pay AMT tax if applicable. Now, what does that mean? The AMT was created back in 1960s to prevent high-income taxpayers from taking too many tax deductions. High-income taxpayers need to calculate their taxes twice. First, using the normal income tax way, and then second, the AMT tax way. Then the taxpayers need to pay the higher of the two. If you have exercised last year, you also have to calculate taxes both ways. It's complicated because there are other events that go into AMT calculation, and you have to wait till the end of the year to know the total amount of AMT. So how does the IRS know that you exercised last year? The company sends a form called 3921 to the IRS. The company needs to send you the same form by January 31st. You can use the fair market value specified in the form to calculate the AMT. Now, some companies give you something called early exercisable grant. This allows employees to exercise early and avoid AMT. Early exercisable grant just means that you can exercise before the shares are vested. If you have an early exercisable grant, it's important to remember that you also have 30 days to fill out a form called 83B. They're really strict on this. There are no exceptions. So we talked about why employee options are broken. First, the exercise window is very short. It's only 90 days. Second, you're locked in. You cannot sell until the company goes public or gets acquired. Third, taxes are complicated. So how should you exercise? Remember, you don't have to exercise everything at once. Exercise as much as you can as your stock vests. If your AMT is over budget, one way to alleviate the tax burden is to use IRS's tax payment plan. But you also have to remember that you have to pay interest and penalty. But this interest and penalty goes down as you pay down the loan. You can use IRS short-term plan to buy some time to shop around. Some credit unions might have lower interest rates. So choice is up to you. You can live your life as is or exercise to have a chance to change your life. So which will you choose? See you next time.